Hello. Welcome to the live stream. We've got Matt with us.
Good morning, everyone.
Do you want to introduce yourself for people that
I
may
would be
not know who you are?
happy to, Raj. So, my name is Matt. You can call me Trader Matt. You can call me Matt Hensley. You can call me Mr. Teresius, whatever you want to call me. I am a 10-year trader. Just kind of had my 10-year anniversary of trading a couple months back. Full-time futures day trader, part-time trading educator. I've worked all over the place. I've worked for small independent companies. I worked for the education arm of TradeStation for a couple of years. About 2.5 years ago, I started my own company here. Just a little bit of a side hustle to supplement the trading income. It's been going very well. And I specialize in a couple of different areas. I specialize in helping traders build out their trading business, right? The business side of things, having a business plan, all of those kinds of things. And I also specialize in trader psychology and risk management, right? The essential tools that every trader needs to survive. So I've been doing that for the last couple of years. Hooked up with Josh, Raj, Asher, and Brian and the gang a couple of years ago. We've had a lot of conversations about trading education, about trading technology. And so kind of been a little bit of a behind the scenes consultant / advisor as the futures desk has got off the ground, and really happy to be a part of the team here. So that's a little bit about me.
Awesome. Morning.
Good morning, Alan, Billy, Richard. I know we got a lot of people here. Guys, I am not we're going to pull up my screen here momentarily. I'm going to walk you through a little bit of my morning routine. Got a little craziness this morning. We're bouncing around. Our ATR is spiking, but I want to take you through just sort of my morning routine and kind of the things that I do. So today is probably going to be a pretty hectic day, right? Obviously, yesterday, President-elect Trump announced tariffs on China, Mexico, Canada, et cetera, et cetera. So what form those take, exactly what details go into that. The markets are going to now have something that they don't like, which is uncertainty. You know, there's this conception that, well, the markets like this, the markets don't like this. I think if recent indication will tell you anything, the markets do not care about, what party is controlling what. They don't care about what's going on overseas necessarily. What they don't like is uncertainty, right? What was some of the pullback over the last couple of weeks was some of the uncertainty in the Ukraine-Russia situation, right? There's going to be a little bit of uncertainty, I think, as we go through the holidays and until we get to the inauguration and what happens after that. Markets don't like uncertainty. That doesn't mean they go down, right? That doesn't mean, oh my goodness, the markets are spooked a little, so they're going to crash. No, but they're going to do kind of what they've been doing so far today, which is a little bit of chopping around. But anyway, I want to take you a little bit through, and I'm not a hold your questions till the end kind of guy. So if you have any questions, feel free to just go ahead and put them in the chat. Okay, let me make sure I've got the chat up here so I can see everything. Beautiful. All right, so how's everybody doing this morning? Everybody let me know where you're from and how you're feeling this morning. What's the temperature where everybody's at? You guys have the honor of having I don't have my camera up. Usually I do. Apologize for that. But this is the first stream, first anything that I'm doing work related, education related at my new house. Been in the process of moving in on the weekends over the course of the past few weeks. And actually, I'm here right now. As soon as the market's closed today, I'm getting in my car and driving back. Doing Thanksgiving with the family, and then we're loading up people and pets on Friday and coming down. But I at least have my trading computer set up here. The rest of this basement is just covered in monitors and cords and lighting rigs and all of that. It's kind of a mess right now, but overall, this is kind of how I start my day, guys, right? So I usually am at my desk. I'm on Central Time. Markets open at 8:30. I am usually at my desk no later than about 6:45 to 7. And I'm not necessarily in a hurry, right, guys? I'm sitting down. The first thing I get up, take the dog out real quick. Then I get my cup of coffee, come sit down at the desk and just kind of process the overnight, right? Like, what did we move a lot overnight? If we did, I want to know the reasons behind it, or where the next areas of support or resistance are in the indexes, the NQ, the ES, the YM, et cetera, et cetera. I'm also going to if there hasn't been any movement, that makes that part a little easier, right? But I always start my day on the 4-hour chart, guys. So we're going to pull up a 4-hour chart here of the NQ. Scrunch up our market action a little bit, right? So let's just do a little bit of a recap, right? So we come back here, guys, and this was, as we led into the presidential election, this was the markets anticipating uncertainty, right? A tight race, maybe waiting a few days to call. Didn't happen, right? We knew before we go to bed that President-elect Trump was going to win. Markets shoot up because that uncertainty is gone, right? Now, no, there's no uncertainty. We're not going through multiple weeks of all the lawsuits, recounts, all of that. Boom, we have an incoming administration. Then we just sort of chopped around a little bit and ended up kind of right back at pre-election levels, right? And part of that was just the markets taking a little profit, some of the big boys taking a little profit. Some of it was geopolitics, right? A little uncertainty with Ukraine and Russia, what was going on there, cabinet picks, all of that kind of stuff. The markets, I think, are going to be reacting quite a bit to some of the at least announced economic policies of the incoming administration. And of course, last night we got the tariffs announcement. Right now, I do think the market's going to wait to see exactly how that's implemented, and if it's anything like last time, there's going to be tons of exceptions. Right, iPhones were an exception in the last tariffs coming from China. Well, that's obviously one of the very big things produced there. So does our Apple products exempt? I would imagine anything Tesla needs will probably be exempt with Elon Musk's closeness with the administration, right? All that kind of stuff. And these are macro things. These are fundamental things. But at the end of the day, the markets are driven by those fundamentals. We are technical traders. Almost every retail trader is there's no edge in fundamentals because we're always the last to know, and most of what comes out is already priced in, right? Like, I can't tell you how many people said the announcement of tariffs yesterday, we're going to wake up to a limit down tomorrow, right? I saw all the idiots on social media talking about that. That didn't happen. We weren't going to shoot up on that. We weren't going to shoot down on that because, quite frankly, if they even come to pass, again, we're at least a couple months away. And B, what are the exceptions going to be, right? We do have, as you can see on your screen there, we do have FOMC minutes coming later today. The markets and FOMC have had a weird relationship in calendar 2024, right? There hasn't been a lot of unpredictability. And let me see if I can pull over the Fed Watch tool. I have that in this bookmarks or this bookmarks. Okay. All right. So the Fed Watch tool, we have a meeting coming up end of December or mid-December. When is that? The 18th. So this is so we're basically now we're going to be we have a 43% chance of no rate cut, right? Our current is 450 to 475. So they're calling for a 43% chance of no rate cut. A 56% chance of a 25 basis point rate cut. Now, this will change a little bit as we get towards there. Also, if again, if past his prologue, we can expect President-elect Trump to get involved in the FOMC. I think he's already threatened to fire Jerome Powell. Powell's already said he's going to have to fire. What's going to come of that? We don't know, right? So again, a little bit of uncertainty. So the markets are going to be reacting to uncertainty, sometimes by no reaction at all, right? I know that doesn't quite make sense, but you understand what I'm saying there. Yeah, TFD, let's go. So as far as where we're headed from here, well, right now we have a pretty good sloping upward channel here. Let's use the wonderful little Project X trend lines. Nice upward sloping channel. So I want to talk a little bit about this because, guys, I've been on the road off and on the last couple of weeks, so I'm usually catching up with conversations in the Discord later on in the day. I want to talk a little bit about platforms and some of the tools that we use, right? To me, your platforms, plural, are your tools, right? You want to use the analogy. I've heard the analogy, you're a surgeon and the platforms are, your scalpel, your forceps, I'm not a surgeon. I don't know the names of all the tools. Or you're a carpenter and your platform is your hammer and your nails and your level and your et cetera, et cetera. What the hell is that? Oh, okay. My new house is right near the other side of the road is a cornfield, so they're crop dusting. That's a little unusual to be doing at this time of year, but whatever. Anyway, so people want to talk about whether it's the Project X platform, which TFD has launched with Rhythmic, which is coming pretty soon. They want to talk a little bit about where the all of this is, right? And what this we have this tool, we don't have this tool. Guys, find a platform that you love, right? Is every platform going to have everything you want? No. I use TradingView for a lot of things. I use Edge Pro X, and obviously I use Project X for my trade entry. I do now. We don't have a simulated thing up here yet, but I love their order entry tools, guys. The on chart trading is second to none, right? So if I wanted to do a stop buy up here, and we can slide around. If we find a trade here in the next few minutes, guys, I can we can show the bracket management tool. Once you're in a trade, you drag your profit stop, your stop loss, etc. You can move your orders around. I've always really enjoyed chart trading. I think it's the easiest for me. Some people, and I do some dome trading in Edge Pro X as well, but I'm not much of a dome trader. That's not to denigrate those who are. But that's just, again, something that for me, the majority of the charting that I do is going to be in TradingView. Okay. Now, so coming back to my point, find a platform that you really like. There are a lot of traders that swear by Sierra charts, some by TradingView. There is nothing. What confuses me a little bit about some of the back and forth is there's nothing that says you only have to have one, right? Now, do I recommend having 7? No. And I know people that trade with a lot of those. Okay. But find a platform independent of, whatever company you're with. And hopefully, and by now, if you've gotten an invite, you're with TFD. If not, more invites on the way. But you get into a situation where it's like, well, I can't go to here because they don't have this and they don't have this. And guys, why are you going to use tools that you're not comfortable with, right? Why are you going to use, if you're a surgeon, why are you going to use a rusted scalpel? If you're a carpenter, why are you going to use a hammer that's cracked on the handle, right? Find something that you can, well, Matt, that's an additional cost. Yeah, but you know what? Honestly, TradingView is having their Black Friday sale right now. I think I end up paying a couple $100s a year for that platform. To me, being comfortable in what you're doing is worth way more than a few $100s a year. Now, sure, if a platform wants to charge you $500 a month, that seems a little excessive to me. But I pay $35 a month, I think, for Edge Pro X. I pay, like I said, I don't know exactly on the sale, but it's a couple $100 per year for a TradingView. All right. So we're talking about let's see, about $800-900 a year in platform costs. Okay, guys, this I really want you guys to understand what I'm about to say. This is not a hobby. And one of the reasons that there's a lot of crossover and a lot of um, sync between what I do and what the futures desk does is none of us are interested with working with drive-by traders, right? People that are looking to play a couple of games, make one withdrawal and move on with their lives. And there's a lot of those people out there. Okay. I like to work with what I call 20, 30-year traders. I don't care if somebody's 60 years old when they start with me. I hope they can trade for 30 years as long as health permits, right? I hope to be trading when I'm 90 as long as health permits. But you know, working with traders who are in this for the long haul. I want to work with people who eventually want to do this for a living. One of the questions, if I'm working with somebody one-on-one or they're in one of my programs in my community, one of the first questions I'm going to ask them is, if you could quit your job tomorrow and trade for a living, would you do it? And guys, I've asked that question a few hundred times. I've only gotten one no, and it was from a college professor who really, really liked what he did. And he liked to trade, or he traded in the mornings, taught in the afternoons, and just really enjoyed teaching, and good for him. But other than that, everybody has answered the same thing. And so that's why when you see something, okay, let me talk about track record. So this is a popular question in the education field, right? Where it's, hey, how do I know you're profitable? How do I know it? Now, first of all, let me say this. I could show you months or years of account statements, right? I could do that. Um, at the same time, I will, well, you know what? Let me illustrate this. Let me tell you a story. When I was at Trade Station, I had to go through a heavy fraud background check, make sure I wasn't, censored by the CFTC or the FTC, SEC, all of that. Had to show 3 years of account statements, all of that to work for them. Somebody asked me the same question my first day in, and I actually pulled up my account, logged into my account, and showed them my track record for the last few years. And they said, I'm doing this live on stream. First of all, I got yelled at by our legal for doing that. But then the guy's like, well, it's photoshopped. Like, bro, I'm literally streaming this live right now. And so honestly, I don't work with people to have them make the same amount of money that I do. I don't have, there's going to be people that make more money than I do. There's going to be people that make less money than I do. I've been a profitable trader for the last 7 years. I could, at some point, what I'm doing here on a free stream for you guys, I hope to be providing value. And that's what you should judge me by. Is that what I'm giving you is helpful to your trading career. Okay. Now, as we go forward, you're going to see me. You're going to see this account that I'm going to be streaming this probably on my site or on my YouTube on a day-by-day basis. So you will be able to see that. One of the things that TFD does very well is having this. So you will be able to see this account grow. You'll be able to see me at some point, hopefully, pass the account, get to brokerage, all of that. So that's coming. But as far as what the traders need to ask the right questions, right? For me, when I first started in trading, I tend to be a little harsh on newer traders in their mistakes because, quite frankly, I made all of them. I know the thought processes that are going on behind the scenes there, right? Like, so when I got into trading, what did I say? I said, listen, all this trading psychology crap is garbage. All this, just give me a strategy, give me a winning strategy, and I will be successful. Well, guys, one of the first strategies I learned was a swing trading strategy called the 50 bottom bounce, right? One of my mentors taught me this strategy. It's kind of a bottom bouncing small to mid cap strategy. I lost about $15,000 on that over the course of my first 6 months in trading. Okay. After that, it was my most profitable strategy. Just that strategy made me about 70 grand over the next 3.5 years. The strategy didn't change. The market conditions when I started really didn't change. Market conditions when I started trading 10 years ago didn't really change until COVID. What changed? My ability to trade the strategy, my ability to execute. TFD calls themselves a prop firm, and I like that because I think it differentiates themselves from the funded trader companies, right? That don't provide the tech, don't provide the coaching, don't provide those particular tools, because their profit model, this has been explained to you guys, I know, a lot in the past few weeks. Their profit model is not based on traders having long-term success. Their profit model is keeping you stuck in evals, keeping you stuck in resets, and breaking through activation fees, right? Like, I'm sorry, I'm going to say this, and if other people get mad at me, so be it. An activation fee for a simulated account with no path to or no defined path to a live brokerage account is one of the biggest scams in this industry. And the way that it has been normalized makes me want to punch a hole in my new walls, but I'm not going to do that because my fiance would get really upset. Okay, activation fees to get you into into a live brokerage account, or a sub step to get to a live brokerage account. Fine, I get it. At TFD, you can pay all that up front if you choose, or you can defer some of the costs, right? But for me, one of the that's one of the issues that I have, particularly with this business, right? All right, so let's get into the charts, guys. Let's take a look at a few different things. So we're going to get down to I go on a 4-hour chart for my what I call my macro thesis, right? So my macro thesis right now is bullish. All right. Now, does that mean I'm only going to trade according to my macro thesis? No, but it means most of my trades are going to have a lighter path of resistance if I'm going long. Now, to be fair, we are in an upward channel here on the NQ, but we are showing a red candle. Now, we have just started our high volume candle of the day. So on a 4-hour chart, the way I have my 4-hour charts configured, from 10 to 2 Eastern is almost every single day, barring just utter chaos, the high volume candle of the day, right? So in this case, this candle that we just opened here is the 9 to 1 Central, or the 10 to 2 Eastern candle. So for me, this is a candle that's going to dictate a lot throughout the day. And one of the biggest mistakes candlestick practitioners can do is to make assessments on a candle before it's closed. And being that we've only had this candle open for 22 minutes now, there's not a whole lot of we can draw from it. So at this point, we're gonna jump down to the 5-minute chart. I know there are a lot of people, guys, who use shorter charts. Just my not so humble opinion, I think those can really, really be a waste of time, right? I saw somebody asking about a 10-second chart the other day. Honestly, if you can demonstrate consistent profitability on any time frame chart, that's what you use, okay? But for me, when you get down to, let me just get some of this stuff off the screen, okay? I got VWAP, and I'll pull over my trading view in a minute and show you everything I have on there. But right now, I just wanted to kind of show you this platform. When we go to 1-minute charts, guys, this is just noise to me. Okay, there's just so much noise on this chart. I tried 15 minutes for a while. 5 minutes is kind of ideal for me. Is there noise on the 5-minute chart as well? Yeah, there is. But for me, this is where I can make the best decisions. I always do like to stick a white vertical or any kind of vertical line. A white vertical line at the New York Open on my 5-minute charts, right? So I know where the main action of the day started. I have a 3 and 8 exponential moving average here. The 3 is the white. The yellow is the 8. One quick tip, guys. If you're lost in your trading right now, if you're somebody who's maybe just gotten started in the last, and in fact, if you want to put in the chat, guys, how many years you've been trading, months, et cetera, okay? If you're newer to trading and you're not sure where to start, there's 2 areas that I recommend, okay? Two things that I recommend putting on your chart to get started. The first is VWAP. Let me pull over my trading view chart. Okay. So the one thing TFD, I hope they add in the short-term future is standard deviation off VWAP. They have actually a very good VWAP tool. It's this VWAP HLC3 session tool. It seems to be very accurate, or at least accurate to what I use in terms of, let's see, it's right now it's got our VWAP here at 25.73, 25. Okay, so it's like 1 cent off. So it's very, very accurate here, guys. Getting a little bit of a VWAP tap, VWAP bounce here in the NQ. So I have VWAP. Pardon my bad mouse handwriting here. Up here is the +1 standard deviation off VWAP. Down here is the -1 standard deviation off VWAP. -2, +2 around up there somewhere as well. Guys, there are a few core pieces of knowledge that every trader, I believe, should possess. A general understanding of probabilities and standard deviations is one of them. Now, this is not some, accounting 305 course that you need to take. But if you're not familiar with probability, if you're not familiar with standard deviation, the bell curve, all those kinds of things, I highly recommend going to Investopedia or find, one of those colleges. I know the Ivy Leagues do that, where that have free courses, free video lectures. Go to a statistics class, find something on probability, standard deviation, etc., and look that up. It will help you with some of your charting, especially if you're a VWAP practitioner like I am. It will help you with your journaling, with your analysis, right? When we're talking about outliers, when we're talking about all of that kind of stuff, that will help you. Okay, so all right, what are we doing here in the NQ? We're breaking a little bit below VWAP. I want to see how are our Renkos looking, because I might have a Renko trade on deck there. And not necessarily. Just a second here, guys. No, we're too close to VWAP for me to get in on the Renko. So I would like to see. The only time frame I use below 5 minutes, I will use a 3 minute on the Renko chart, but I have a very tight. So I go traditional, box size 1. I don't need these. Okay. So I have a couple of Renko-based strategies that I like to use, guys, and I'll talk a little bit about one of them. Don't go start trading this tomorrow and assume everything's going to be okay. I have my style and my strategy or my style of trading, my methodology, right? Everybody should have a trading methodology. So basically it should be, if you're talking to another trader, okay, how do they trade? What do they trade? Etc. Hold on, guys. Okay, there we go. Sorry, I was a little behind on the stream. I wanted to make sure I didn't miss anything. So my trading methodology is simply this, okay? 3 to 5 trades per day, ideally. Okay, some days it's more, some days it's less. Most of the last 2 or 3 months, it's been a little less. I've been a little closer to 2 to 3s, 3 to 5. I'm looking for approximately, oh, sorry, hold on. That should not be. Approximately a 1.5 to 1 reward to risk, right? Everyone says risk reward and then inverts the the numbers. So for me, like in the NQ here, I'm willing to risk 20 handles to make 30. Now I don't normally take losses that big, but let's say approximately I'm looking to make 25 handles and I'll risk 17 to 18, right? That's still going to be in my methodology. All right. Part of my methodology, part of my edge, I don't take big losses. I will not sit here and let an NQ trade go 30 handles against me. I don't sit here and let an ES trade go more than $400 or $500 against me, right? That's something that is so vital to me, not only to my methodology, but to my trading psychology, okay? Over the years, I have kept very, very detailed journals, okay? Now, when you hear trade journal, you see what TFD has here, right? And that's important. That's one aspect of journaling. What I call the record of trades, right? So we have what trade was taken, when it was taken, the setup, all of this. And guys, obviously you've seen the demo ad nauseum. TFD makes it so easy. to integrate all of that. And the fact that, guys, I used to pay, well, I still do because my subscription isn't up. About let's see, 170, 160, $170 a year to my journaling software. And I still at the end of the day have to export my the CSV file and import it, and then I got to make sure everything's right. Sometimes it's, it doesn't always. In fact, going from Edge Pro X to Trader Sync, I always had to play with the dates. The dates format didn't sync up. There was nothing I could do to change it. So I'd have to go in and manually click on all the date columns just to make sure the date was formatted the right way. And then you import them. Hopefully everything goes right. You got to go tag everything. Obviously in TFD, that's not the case, right? The trades pop up in real time. You immediately are able to label them according to setup, and then you can add any tags either during the trade, after the trade. You've seen the demo on how to cut and paste charts. Guys, everything you need is built into that. So for me, like if you're, again, we've talked about the TFDX platform. If your favorite platform is something that's rhythmic based, like for me, Edge Pro X is rhythmic based. I have an account with TFD. I haven't traded it yet, just started. You can see it on the screen here. And as soon as they offer rhythmic, I can already tell you this: I'm going to get a second account with them and interface that through Edge Pro X, because that's what I like. Order entry again on Edge Pro X for me is very intuitive, just like it is on TFDX. So your first priority in any platform should be it has the tools that you need. Guys, there's a lot of great indicators out there, a lot of great systems. There's no one magic one. I got news for you. There's no indicator that works all the time. Stop looking for the perfect indicator. Stop looking for the guy you can just follow his or her trades. If that it's trading is personal. Can you learn a lot from somebody from watching him trade? Sure. Okay. I've run live trading rooms over the years, but I can tell you this. What do you do when if I'm running a live trading room and you're just following my trades? A, how are you going to learn to trade for yourself? B, most trading rooms don't last more than 2 or 3 years, guys. It's a very, very high burnout rate in this business, right? Very, very high burnout rate, because I can sit here. I was an options trader for TradeStation. I texted out alerts for every single trade that I took for 2.5 years, and they cross-referenced them to make sure that I was doing it, because legally they were on the hook if I was lying about it, right? I can't tell you the stress level that came from that, knowing, as I'm putting that text in, now it's swing trading, so it's not, as time alert sensitive, but where I'm looking at that list and 253 people was the height at one point that I know are going to be taking that trade with me. That's a pretty high level of stress, guys, right? Well, if you know what you're doing, you shouldn't have that. So that's great. But what, on the one trade, out of a couple that I'm wrong on, or 2 or 3 or whatever, people lose money on that. And what if they went higher size into that versus the one before, right? I mean, you see what true freedom in trading, is: trading your own setups and trading for yourself. And that's what every trader should aspire to. Now, again, does that mean you can't learn from? I mean, I say this as somebody in the education-based business. Does that mean you can't learn from me or somebody else or whoever? Of course not. Of course you can learn from them. But at the same time, guys, this is a solo, lonely business when it's done right. Now, a community like a Discord server, a community like what I run on my site, those things can be very helpful. But at the end of the day, I'm not coming through your screen and placing your trades for you. Nobody's going to do that. It's on you to do that. Trading, guys, you know what? One of the reasons I love trading, because we kind of live in a BS world right now where, especially in the kind of the online influencer world and all that, people can be whatever they want to be. Last week I told you guys that story of the photo shoot that we did for You Can Trade, and how the guy had a fake private jet set up in his studio. So, influencers could go in there and look like they're on a private jet. Guys, what's the old saying? Don't believe anything you hear, and only half of what you see. And in this world, guys, people can be whatever they want online. At the end of the day, you're either a profitable trader or you're not. And guys, it doesn't even matter. I know we all like to shout to the rafters when we're making money. Okay. But at the end of the day, you're either making money in this or you're not. At the end of the day, you're either getting funded, making withdrawals, or you're not. This business is the ultimate binary, right? So I'm really, really excited to see kind of, again, the development here. And you watch what's going to happen. I've got a big prediction for you guys. As we move into the new year, as we move into February, March, April, etc., the first 6 months of calendar 2025, I think you are going to see the traders that stick with the program here at TFD. Not, listen, there's no guarantees. I'm not saying every single person is going to be successful, far from it. But I think you're going to see serious development amongst those traders, right? Guys, this is something not a lot of people in this business are going to tell you, right? Um, it may take you quite some time to be profitable. It might. You may be profitable in 2 months from now, 3 months from now. It may take you a year or more. Okay. One of the things that I really like on TFD is they've removed the subscription anxiety. If you spend $250 to get an assessment, right? You're not going to spend that again at any point, right? Unless you're renewing, for many, many months. $29 renewals, for accounts in a non-failing state, or 99, 120, et cetera, for that's game changing as far as I'm concerned. Now, an extra 50, $60 here or there, yeah, that's great. But it removes that anxiety of saying, gosh, I need to YOLO this because I got to pay 200 and something, et cetera, et cetera. All right, so let's pull up the plan builder here, just so you guys can see. I want to show you what I have, guys. This is the plan I chose, and I'll tell you why I chose it. Okay. Yeah, so this is basically it. So I'm giving myself, I wanted to keep it under $300, and I wanted to pay everything up front. So this is the plan that I have. Now, why did I give myself so much drawdown? Do I really need all this? Maybe I do, maybe I don't. But again, I'm in the process of moving right now. The rest of the year for me is going to be chaotic. I would be willing to bet my trading will probably, I won't say my trading will suffer. Okay. But I'm getting out of my routine. I'm getting out of my comfort zone. I'm working with a screen setup right now that I'm not familiar with. Right. I have new desks. I have new screen. I bought a lot of I updated a lot of tech as we're moving here. So for me, I had things down to a science where I was. I know exactly where I'm looking at the screen at any given time. I know exactly what I'm looking at. Now there's a little bit of an adjustment here. Now, do I think I'm going to go from a profitable trader to blowing account after account? Well, I certainly hope not. Okay. But I do expect I will not be as sharp for the rest of calendar 2024 as I have been through most of this year. So for me, I'm going to risk $300 of my own money here, as opposed to, and if I were, let's say I were to hit this max loss and have to either reset or do what I need to do, I'd rather risk 2250 of eval money, assessment money, as opposed to what would probably be six, seven, $8,000 of my personal money from my personal brokerage. I will tell you guys, if you will see this in the coming months, my plan right now is to do the majority of my personal trading through TFD. It's going to be a little bit of a process, right? It's going to take me a couple of months again to figure out the workflow and to get settled here. But that is my plan. So, guys, any questions on any plan? Let me tell you. I'll tell you this. This is the plan I would build if I was starting tomorrow and everything is like I wasn't moving. It's not Thanksgiving week. Christmas isn't coming, etc. I would probably build this plan right here. Let's say $1,500 max loss. I'd go probably 5 days. I want to keep my what I need to make per day at about $500. So I'll go with, so this is about where I'd be in this scenario. And really, I'd probably just start with here, right? Don't get too hung up on the starting contracts, guys. I think people are getting way too hung up on that. You get into the brokerage and you're demonstrating consistent profitability. I know that the team at TFD will work with you on that. They've got some really nice templates up here. But guys, you can build. So if you want to, you can build basically what, a $99 plan or 119. That's pretty darn good. If you have failed evals and assessments at other companies, for goodness sakes, take your time. If you have failed multiple assessments at other places without passing anything, I would highly recommend your first goal, your number one goal should be to still have your account and it's in a non-failing state for your 31-day renewal, right? So let's say you start right about here. We'll go 300 there. Okay. That's a really nice assessment. If you just want to pay 169 up front, you can do that. But your goal is your ultimate goal should be to get to brokerage and be making consistent withdrawals. So I don't want anyone to mistake what I'm about to say. But if you have never passed, if you've taken, let's say, at least 10 evals or assessments at other companies, and you have not passed one, this should be your goal, your first month goal, your 31-day renewal in a non-failing state for $29. You should pay that $29 with a smile on your face. Okay, that's what you should be doing, because the first step to passing is an assessment is to not fail it, right? I always tell people in trading, the first step to making money in trading is to stop losing it. Now, companies like TFD, they are a huge net positive in this industry. For us as retail traders, obviously, as we've seen, not all of them are structured for the benefit of long-term trading success. And I'm hoping that we will see I'm not hoping, I know, because we're already seeing it, that the rest of the business is going to start following TFD's lead with the way they do things. Okay. Really, really excited. I've passed hundreds, but 99% of the time I self-sabotage right before payout. So, Nick, first of all, you know that, and that's good. That's the first step, right? So you know that you're basically self-sabotaging. If you can now, I wanna stress something, and I don't need to know what company, I don't need to know the structure of the evals. If you're passing hundreds of evals and you're not getting to payout, I would be willing to bet those evals are probably pretty simple to pass, right? You don't need to demonstrate any consistency. To me, this was about a year and a half ago. So about 2 years ago, I met Josh and some of the team where he was at the time, and we started having a lot of conversations about the business. He wasn't. I didn't know much about the prop firm business. He didn't know much about the education business. We had a lot of conversations about both those, and right about that time, there started to be a pivot away from uh, consistency rules in evals to consistency rules in funded. And I don't have my camera set up. I'm making air quotes around funded, right? Sim funded is not funded. Uh, and that really created some different expectations, I think, among traders. What guys, if I can, I don't care uh, what rules somebody has in their assessments or their evals, right? The point of the assessment is to show that you can manage risk. It's possible to pass an assessment without being a great trader, but if you can manage risk, that's the most important part of that. Once you've demonstrated that, now I'm not saying you're going to have success in the brokerage right away, but that's why the assessments exist, to prove that you can manage your risk. So once you've proven that, why are companies putting long term? It drives me up a wall, right? Like, well, you can only withdraw 50% of your funded balance for the first 60 day. Why? Why? What's the point of the eval or the assessment with if you're just going to put more rules on me, right? Once I prove that I can manage risk, I mean, once I've proven that, there shouldn't be those types of rules anymore. Now, things like drawdowns, et cetera, those protect companies as well as traders. So in theory, I'm not opposed to those. But like consistency, think about this. So you move if you're with TFD, okay, and you've passed your assessment, you've gotten through the phase, this number two here, the sim brokerage, and your payouts are enabled. And let's say you spot the perfect trade the next day, and you let that SOB ride, and you make $5,000 on that trade. Okay, I'm not saying that's typical, and but let's say, yeah, you get into the and you're short the markets, and Russia drops the bomb, right? Right, something that is just and everything just plummets, and you're sitting there watching that green get bigger and bigger on your screen. To me, now. Thankfully, I haven't I haven't experienced this because I haven't really messed with other companies much. But to me, like the worst feeling in the world would be to do that and then be told, "Oh yeah, you need to be profitable for 5 more days of at least 250 bucks." I'm just throwing numbers out there before you can access that trade that you just made in a live brokerage account, right? Or Simfo, whatever. That to me would be so bleeping deflating. And where, if you get to the live brokerage here and you make $5,000 on your first day, once you get the buffer taken care of, you can withdraw a huge chunk of it. Daily payouts, guys. Now I will say this: I'm working with some traders in my community right now about building trading business plans, right? And one of the things we're talking about, because almost everybody coming into trading now comes in through a company like the futures desk. So when do you take payouts? For me, and I'll tell you what I plan on doing. I plan on taking a paycheck every other Friday. I'll withdraw probably, I think the plan I'm going to have right now, and I've been mapping this out. And guys, have a plan. Don't just get there and do this, right? Have a plan to take out about 80% of my earnings from the prior 2 weeks. So, A, I'm taking money out of the account. And B, I'm still increasing my account balance a little bit, right? Well, so Nick, let me tell you this. TFD is a true prop firm. So what are prop firms? Let's make this distinction. There's prop firms and there's funded trader companies, and even the funded is in air quotes. Prop firms are designed to develop traders. They're designed to develop traders and to then share in their profits. Prop firms have existed for decades. Okay, I currently, I'm not there right now, obviously, but I currently live just outside Chicago. There have been futures prop firms in Chicago for decades. SMB Capital is a big one in New York. They're kind of, I don't know if they're not one of the biggest, but they're pretty famous because they do education, they do social media and stuff like that. There are firms out there you've never heard of. In fact, the biggest ones and the best ones you've never heard of because they don't publicize and they recruit very quietly. But so what these prop firms do is they identify people that have the characteristics that lend themselves well to trading, right? Former Division One athletes get recruited very heavily by these places. So let's say you're a Division One quarterback, right? And you play for a team. You're never going pro. You don't have the ability. And so, you're winding down your career. It's not out of the realm of possibility for some of these firms to reach out to people like that. Hey, we saw you, you're a 3-year starter at, I don't know, Old Dominion, right? Or William and Mary, one of the East Coast small schools. And you're not talented enough to go play in the next league, or in the next level, or in the league. Okay. Yet you were very good. You didn't throw a ton of interceptions. We want you to come learn with us for a period of time. And so they hire this person for a salary for a year, 2 years, 3 years. It depends on what firm. And then they train you. You don't have to have any bit of knowledge coming in. They train you. And then at the end of that training period, one of two things happens. They give you a large account, and the split usually is 50-50 at the professional prop firms. Or they say, you know what? You just haven't developed the skills. We appreciate your time, but we're going to have to let you go. Okay. So that's what a traditional prop firm is. It's impossible to completely replicate that experience in a virtual online environment. But TFD, both in what they've already done and some of the stuff they have planned that you guys haven't even heard about yet, is attempting to do that on the virtual. And they have some of the baseline to be successful with that, right? A true psychopath. Yeah, well, listen, we're all a little nuts. If you're a trader, just the first thing you need to admit to yourself is you're a little off, and that's okay. We all are. To do this, you can't, guys, to really be good at this, you can't be normal. You can't be a normal person. I hate to say that. And I don't use normal in a negative connotation or a positive connotation, but some part of you has to be abnormal in terms of in terms of being a successful trader. I know, some of you guys really get that, and some of you are still kind of understanding. I want to catch up. How do you get them to follow the plan? I have all the plans, but one bad day I blow it all, even live brokerage. I think I have to appoint a third-party risk manager now because I put all at stake. Well, Naveen, one of the things that I love most about the TFD platform TFDX, is this right here. Go into settings, risk settings. Okay. So you can set it to, automatically click brackets into your trade. Now, I don't prefer that. But so, for example, I just showed you I need $500 a day to pass. Okay. So, what I would do in this scenario, my personal daily profit target. Okay. Now, I'm going to give a little room in case there's a sloppy fill, but I would put about 550 on here. Okay. And so I got to keep my risk reward in line, right? So I would probably put my personal daily loss limit at about, I'm going to say 375. I don't know that I'll let it get all the way there. And what am I going to do here? So once I hit these areas, the account gets liquidated for the day and I'm blocked out of trading, right? Okay. So now again, once you get into the brokerage, this you can still do this, but I would recommend a personal daily loss limit. I don't know that I'd do a profit target, or at least I'd increase it maybe to $700 or $800. But Naveen, this is why you keep a journal. All right. And this is why you're monitoring your day-to-day trading. So let's say, in fact, I worked with a client, I did a coaching session with a client 2 weeks ago. We were looking through his journal. And I saw that his winning percentage in the morning was about 52, 53%, and it was below 40 in the afternoon. Okay. Now there was more to dig into, but he was pretty consistently making $400 to $500 a day, and then finishing sometimes in the red, or sometimes, there's nothing more deflating than looking at a balance. You're plus 500 on the day, you make a couple bad trades, and now you're basically break even, or you're only up $70. And anything within the 200s, like, if I'm negative 150 on the day or plus 175 on the day, to me, I kind of count that as a break even day. I really want to see over $250 of profit, or more than $250 loss if I'm considering a winning day or a losing day, right? So in this scenario, guys, just save this and you're now set up. So as soon as, if you're somebody who consistently hits, let's say $600 in profit, and you give all of it back, well, you put your daily profit target at 600. Now, if you're hitting that, let's say 4 out of 5 days or 6 out of 8 days, then you jump it up to 600. Same thing. Just need slowly, steadily increase it. Okay. And that's how you build accounts. So for me, guys, there's 2 things. The very first thing I need to know with anybody that I'm working with, there's 3 pieces of information that I need. Okay. Average winner, average loser, and winning percentage. Okay. So for example, let's say you're a break-even trader. Your average winner is $300, or excuse $500. Your average loser is $500, and your winning percentage is 50%. Now I know there's commissions and fees and all that, right? But let's say as far as your actual trading, you're a break-even trader. Now, what newer traders will do is they'll say, well, I need to go from $500 to $1,000 in profit. I need to go from 500 to 300 in loss, and I need to get my winning percentage up to 80%. Okay. Good luck. And if you can do that, good for you. But we start small in this regard. So let's see if you can get your average winner to $600 and your average loser down to $400. So now for every 2 trades, you're net positive $200 in theory, right? This is all math and, again, statistics, etc. Now let's say we can get your winning percentage not up to 80% or even 70%, but let's say we can get it up to about 55%. Even 5% is a big jump, guys, right? Again, now we start looking at those numbers, and you start to slowly but steadily increase accounts, build accounts. And guys, sure, you should always be aiming to get your average winners bigger, your average losers a little smaller, and your winning percentage higher. But at that point, all it is a matter of scaling. So if you can do all that with 5 micros in the ESNQ, GCCL, whatever, and then you increase to 7 micros, to 10 micros. So now instead of being net 200 per trade, you go from 5 micros to 1 mini. Now you're net 400 every 2 trades. Again, this is how statistics, et cetera, et cetera. And this is like, 8th, 9th grade level stuff, right? So that's the type of stuff that builds accounts, passes assessments, and most importantly, gets you paid. Because that's what this should be, guys, a paycheck. Now, if you're doing what I talked about earlier and you're, let's say, pulling out rather than 100% of your profits above your buffer, maybe 80%. So your buffer to failure is going from 2,000 to 2,500 to 2,800, 3,200. Once every time that buffer goes up, let's say $2,000, you increase your position size. Go from, you know, 2 minis to 3 minis, 3 minis to 4. Okay. And you're increasing your buffer, increasing your position size, and if you're profitable, increasing your withdrawals. That's how you build this account, guys. There was somebody in the Discord the other day. I forget who it was, so I apologize if you're in here. I would give you credit, but had said that they're once they pass the eval, they're not going to take a withdrawal until March at the earliest. Now, I don't know that person. I don't know their trading style. I don't know what they're going to do, and I don't know if they're going to stick through with that. But I love the attitude. Spend a few months building the account and then take us, let's say you build up $25,000 in that account. And instead of taking 25, you take 15. Now you've got 10 plus the, but again, sit down and do the math on this, guys. That's one of the things I've noticed with traders in any of these companies get in trouble. The successful traders get in trouble is they're just sort of taking it week by week. Well, I did this week, did this, and they're not looking at the big picture. So make sure you're looking at the big picture. All right, guys, before I wrap up here, I want to make sure everybody's does anybody have any questions? I want to make sure questions are answered before we kind of wrap this up. I will be doing plenty of these in December, guys. Again, this week is a little weird, both with the holiday and my move, but I wanted to make sure and check in with you guys. I checked in with you guys last week as well. So any questions? I will give us, I know I'm a little bit on a stream delay, so I'll give you guys about 2 minutes for questions, and we'll go from there. But yes, guys, make use of this. Everybody that's buying right now is getting TFDX, right? Also, Brian, the chief operating officer, has offered if there's any questions about the company or plans or anything like that to jump on as well. So, yeah, there's Brian popping up there. Two really dapper pictures down there at the bottom of your screen, guys. That's too much handsomeness for one stream. But yeah, guys, right here, make use of this. Make use of the risk settings. Now, again, even like if you wanted to put in, let's say you wanted to risk $200 to make $300 per trade, and you can automatically have these pop up on your charts, right? Guys, don't try. One of the things I love about the way they structure their evals here, nobody's passing in one day. Nobody's passing in under 5 days, I believe. Take your time, guys. Once you get really good at this, once you get good at trading, the money will come. Some days more than others, of course. But focus on your process. From the time you sit down at your trading desk to the time you execute your first trade or the market's open, you should have a set routine. I just described mine. I sit down about, let's say, well, I'll round up. I'll say 7 o'clock for an 8:30 opening here in Central Time. Have my coffee. I'm reading the news, anything that jumps out, et cetera, et cetera. Then I'm going in, I'm looking at my charts, make sure everything's set up. Usually at that point, I'll review the prior day's trades as well, just to make sure, hey, okay, gosh, yeah, the last 3 days there's really been et cetera, et cetera. I need to make sure I'm careful today. By the time the market's open at 8:30, I'm ready. I sit the first 15 minutes. I sit on my hands, not literally, but I almost never make trades in the first 15 minutes of the New York Open. So, all right, guys. So I do see some questions popping up specifically on TFD. So I will defer to the outstanding COO here at TFD, and I'll let Brian hop on. I am Trader Matt in the Discord, guys. Like TFD, I will never direct message you out of nowhere. I never cold message people. If you have any questions, you're welcome to either tag me in the chat or you can direct message me. Again, the rest of this week's going to be chaotic for me. I'm going to be hopping in a car and driving another 5 hours here by about 1 o'clock today, and then I'm back here as well. So All right. I think if Brian is ready to take over, I will cede the floor to
I
him.
am. Hopefully you guys can hear me. Matt, can you hear me?
I can hear you. Yes.
Okay. Can everybody in YouTube hear me? If we could just get a quick response in chat, that would be amazing. I know there's a little bit of a delay, so I will wait for the delay. Let me just review some of these. All right. How do you get people to follow their plan? And then, once you're following that plan, how do you stick to it? And you're talking about a third-party risk manager. And me personally, through developing my trading style and understanding who I am as a trader, I'm right there with you. I need somebody to basically control my risk, because when it's good, it's great and I'm fine and I'll follow my rules and I won't jeopardize myself by putting too much risk on. But I tend to go into tilt probably after 2 or 3 trades against me, right? And sometimes more, sometimes less. That really depends on your emotional state, things that maybe happened the day before, as far as trading, pressure, other pressures that might be going on in your life. Trading is very, very emotional. And I think the concept of trading are very easy, but the execution of everything is very difficult. So going back to that risk stuff, me like you, I've struggled with that. And that's why, me personally, I think using the TFDX platform to adjust your risk ahead of time is exceptional. It's something that's going to be game changing for you. And I highly recommend people, when they get into our platform, don't sign up for the most expensive plan. Don't rush. Don't try to do, 5 days and pass, because look, even if you get past, that's not really long term sustainable. The best traders that I've met and work with, including myself, take it slow. And you want to look more at your risk than what potential profits you have. And that's really going to come down to like your risk versus hit rate and things like that. But going back to the TFDX platform and their risk controls, the nice thing about these controls is once you set them, there's no changing them. And that's something I've actually done in the past where, you're trading and you're doing well, and then all of a sudden, it goes against you and you're like, okay, well, I'll take one more. And then all of a sudden you're giving back profits. And before you know it, you're on your stop loss for the day. And then, you're locking yourself out, but you're like, yeah, you know what? I can actually go into Rhythmic and change that again. And then you're unlocking your risk for the day. And then guess what? Now you're completely against yourself. You're not thinking clearly. You're so emotional that you're totally just basically sabotaging yourself, right? And that's what you're talking about. So through TFDX, you could take your trades there, execute on the trades there, use another platform or wait for a Rhythmic to come out, whatever you're comfortable with, but use us and that platform and the risk controls, because once they're locked, there's no unlocking them. And, at the time when you get locked out, you're going to be upset and you're going to feel like, oh man, market got me, but it's okay, because the next day, guess what? You got a fresh slate. You can jump right back in and you're good to go again, right? And you may have some residual emotions, from the day before because you lost or whatever. Trading is very difficult in that sense. Um, so it's great to have that option. I hope people, one, take it slow. Two, pick the smaller plans, because once you get into the funded environment, we can scale you if you're a good trader. And what we mean by a good trader is not your P&L per se. It's how well you control risk, how often you're trading, your I guess levels between, let's say, your profits and your drawdowns, those swings, how big are your P&L swings. Those are all things we're going to look at. And the more consistent you are, the slower you're taking it, the more we're going to realize that you're controlling risk appropriately. And then we're going to scale you up. So if you start with 1 or 2 contracts, like that's nothing, right? We can scale you to whatever size will find some type of diminishing returns. And what I mean by diminishing returns is a lot of people think they can trade like 100 lots or 10 lots or whatever, but the reality of is, when you start seeing that P&L swing, on 10 lots or 5 lots or whatever your threshold is, that starts impacting your ability to trade and execute. And that's why I really recommend people start small, take the time, and build something long term, something consistent. Because even if you pass the assessment, it doesn't necessarily mean that you're gonna do well in the funded brokerage. If, and this is something we see a lot, if you start changing things or getting too aggressive. So hopefully during the assessment, you respect all those rules, and you really, focus on risk, and then it makes it much easier to transition into the live brokerage. And then once in live brokerage, you have that smaller size, you get your feet underneath you, you continue to trade just like you've been trading the assessment. And then we start gradually increasing your risk, increasing your lot size, and working you up into that where you're comfortable taking those larger trades. And then you can balance, depending on what markets you're trading, you can kind of balance, you know, what contract size starts to impact the market. Some markets are a lot more liquid, a lot more liquidity, or a lot more liquid than other markets. So sometimes, taking 5 lots can actually impact the market. You might get a little bit of slippage, but we start to scale you that way, much slower, more traditional prop firm style, right? So please don't sign up for the most expensive accounts. Start slow, take your time. Trading's not a marathon. It's more of a slow, and I say this a lot, but it's more of like a really tedious, slow journey through a really hot desert, and you have a small bottle of water, and that's your risk. And you got to figure out how to like use that water to get to the next stop where you can get more water, right? And trading's that way, where your strategy is not always going to work. Some markets, your strategy is going to work amazing for a couple weeks or a week or whatever, and then all of a sudden you're going to fall into this lull where the strategy just won't work, and that's okay. It's part of trading. And I think it's, for me and for other people, when you get into that situation where your strategy is not working, people tend to like double down or try to get more aggressive instead of backing off and just accepting that the strategy is not always going to work. So that's the type of things. And I know I've said a lot more than just the risk stuff, but that's kind of just me trying to explain everything and how to approach this whole thing and how we're trying to approach it. Let's get into the next one. I don't want to take too much time. Question about Turkey being eligible. I'm not sure. I don't have the list in front of me at the moment. How does TFT make money? Just like every other prop firm, it's through both assessments as well as through the back end. That's why our profit split is going to be drastically different than other firms. I know people are a little bit hesitant on that because they feel like that's a bigger split, but it's like, look, we're actually aligning ourselves with the traders. So by doing so, we're gonna need to sustain revenue through different means, right? Because we're not, changing rules and doing all kinds of stuff to try to sabotage traders. We're aligning ourselves with traders, and in that sense, we need to be there for the traders, provide tooling, provide coaching, provide risk management, provide those tools that traditional prop firms provide their traders. And that also includes back testing and getting into the meat of whatever your strategy is. And then we come in to help you try to hone that strategy. If you're willing to share it with us, hone that strategy, right? A real partner in the space. So we're looking to generate revenue in a different way than these other funding firms, I would say, are currently generating revenue. That's kind of our model. That's how we're trying to make things happen. So the profit split right now is going to be 75 trader, 25 us. That is negotiable. So understand at first, until we can cover what is our risk, right? Because we're handling this very similar to traditional prop firms, right? Once we handle our initial risk on the trader, then we can negotiate those terms, and those profit sharing can be adjusted to be very, very competitive in the space. And the idea is, look, once we find those really great traders that are, and I know a few of them, 1.2 million or something like that at another firm, that then becomes a situation. If they're in the US, they get the K1. We changed the profit split for them to be very, very favorable. And now they're going to be with us long term because we're helping them hone their edge. We're there for them, and we're giving them a good foundation to trade with and a good group of people to trade with that are all, aligned together, right? And that's what we're trying to do. So at first, you're going to have a bigger profit split, right? We're going to take a bigger point of that, just like a traditional prop firm, right? Once you earn your place and show that you're controlling risk and you're doing well, then that's all negotiable. It's a case by case basis. We don't want to blanket everybody with the same rules. And that's what we're trying to accomplish. Very traditional prop firm. But just like at a traditional prop firm, you're not going to come in day one and get like a 90% split because you really haven't earned it. You haven't shown what you're doing. And our capital as a company is on risk, right? That's the benefit of going through these systems is you are paying at the chance to access our capital and also the scaling. Like we will have the money to basically scale any trader to the size at point, at which they're going to reach that diminishing returns, I guess. That's the best way to explain it. I know long-winded, really everything you said. Yeah, so the lockout feature is in the TFDX platform, and that is also, it's called Project X, and you've probably seen it at Top Step. It's the same thing, it's just reskin for our stuff. And they are very, very active. They're developing new stuff all the time. They're developing new features, just like this risk stuff that just came out. So please utilize it. It is a huge game changer for traders because that's one thing that a lot of traders struggle with is, they have those weak moments, and those weak moments are what generally causes those huge like capital losses, like 60%, 70% of their capital in one day. And that one day should not determine your path forward as a trader. And those risk controls are in TFDX. Please use them. We could probably make a demo to maybe go through it all in the near future, but we really want people to lean on those because they're so beneficial. They're huge. But they're just one tool. So if you don't decide to use those tools, then they're not really going to help you much. Yeah, profit split for live is still the 25, 75. The 75 trader, 25 us. As I said, that's negotiable depending on the trader, depending on what they're doing, depending on their performance. That profit split can go all the way up to 95%. So they would get 95 and we would get 5, and that 5% is earmarked for some certain things. So that's all depending on how the trader performs, and it's negotiable, unlike other firms. It's not hard set. No, so the international folks for the K1 stuff, there isn't a K1 for other traders outside of the US. We have discussed internally, depending on the trader, depending on what's going on, making an adjustment for the profit split for them because they're not going to see those tax advantages, but that's still being discussed internally. But again, it is still negotiable. Once you get to the live brokerage, a lot of that stuff is negotiable. It really is feel like you're going almost to like a new job, and you're part of the firm, and you got to kind of like come in with that mindset. If you did the work and you did the journaling, you have the statistics and all that other stuff, we're far more likely to take more risk on you, right? And the really nice thing that we're going to offer, and this is if you do the work, right? I'm talking this, you got to be one of those guys that comes in and just wows us, right? And has the work, and unfortunately not everybody does the work. But if you come in, pass the assessment, you did a good job, you did the work, you have the statistics, there's a very high likelihood we're just going to move you straight to brokerage. Like there is going to be no buffer period for you, right? But don't think the average guy that's going to come in and be like, yeah, I don't ever journal, I don't have any statistics, I don't even know what the heck I'm trading on a daily basis, I change my strategy every 2 days. They're not going to come in, and we're going to put them in a live brokerage account. That's just not going to happen. They're going to have to go through the buffer. Once they get through the buffer, then they'll go to live, and that's the typical cadence for how you get to live, right? They will get there, but they're going to have to go through that buffer period where some people literally will go through that assessment if their stats are good, we'll just put them straight in the live brokerage, no buffer needed. And that's our goal. Like, we're looking for the best traders possible. Let's see. Profit split. Yeah, the K1 stuff I already answered. If anybody has any other questions. No, so if you get into the live brokerage, you will not be paying any assessment renewal, and our assessment renewals are different than others, where we're just trying to cover our overhead, like server costs and platform costs for that $29, right? So once you pass and you're in the live brokerage, you'll no longer have that $29 a month renewal. We'll cover that cost for you. Additionally, we will cover one exchange pro fee for you, because we are putting you in a live brokerage. A lot of these other ones don't charge you for those fees because you're not actually in a brokerage account. And because you are trading somebody else's capital per CME rules, you are considered a professional trader. And as such, you have to have professional data, and we will cover one of those data costs for you, which I think we're the only company that does that right now. I'm sure a lot will come out and try to copy us, but it is what it is. Yeah, so no, you won't have to pay the renewal if you get funded. I'm glad you're thinking about the longer term. Takes you a month to pass. That's awesome. Even if you do have to renew, it's only $29. We really try to think about everything. Do we have any other questions? I love questions. I love feedback. Does anybody have feedback for us? I'll give it a little bit of time because there is a delay, and then I'll let probably Matt jump back in, and we'll go from there. If you're trade durations, I'm assuming you're asking about taking like micro trade, like small trades very quickly, high frequency trades. As long as it's allowed CME, we're gonna allow it, right? If you want to take those type of trades, that's on you. If you want to trade bonds, yeah, we can let you trade bonds. The thing that people don't realize is a lot of the rules that are developed by these funding firms are developed because those particular traders that are utilizing those strategies that will work in a live market, they're using them in a live sim, and it's cutting into these funding firms' revenue. Where for us, if you have a strategy that works, we want to put you in a live market, right? Because then.
Hey, Brian, your mic just cut out. Okay, we don't have basically any limit on trade duration. When will TFT go open to the public?
Sorry about that, guy. Yeah, sorry about that.
No
My
problem. You can finish
headphone
up that answer.
just died.
No problem.
So I replaced the battery. Let me finish up. We were talking about yeah. So trading, you got the bonds, you have the micro scalpers, and these funding firms. You have to realize, like, look, their revenue is generated by the failures of traders. That's how they're funding their firm. The more traders that fail, that's how they get the revenue, and then they take that revenue, right? Let's call the traders that fail Peter, right? They take the money from Peter to pay Paul. Now, Paul is your educated trader. They know how to trade. And some of these traders, this is what happened at another company not too long ago, that seems like everybody loved, and the ROI was great and all this other stuff. It's like, yeah, but guess what? If you never get paid and people lose out millions of dollars, then really what's the return? I guess return on investment, right? There was none for a lot of people. I know a couple guys that lost a lot of money with them traders, and fortunately, they've actually come to us, and hopefully they trade with us. And it's really a really sad situation with what happened. But the business model itself, because the way the business model is established, they're aligning themselves against the traders, just successful traders, right? And that's why you won't see most of these firms develop tools or journaling or anything that really pushes the needle in a positive direction for a trader. Go look at all these other firms. What tooling do they provide you? They really don't. And that's because, look, it's in their interest to have traders fail. And then once those traders fail, that's what pays the bills. And then they take that money from Peter, right? Failing traders, to pay Paul. And if there becomes a point where Paul or Paul's, like if there's a bunch of good traders that find the firm, and there's a point where these really good traders are making too much money. So what they'll do is they'll change the rules, right? You know what? We don't like these bond traders anymore. I think they're cheating us, right? And they'll change those rules because they are the ones paying out of pocket. Where us, once you get past the assessment and you're in a live brokerage account, if you make money, that's great. Great for us. It's great for you. We're partners, right? We want you to make money. So we're going to give you the tools. We're going to get you in contact with our head quant. We're going to find how to make more money. And then we're going to negotiate on those profit splits because we are aligned with our traders in the back end. Trading is super hard. Why make it harder? Why, when you're trading in one of these live sim accounts, you do all the work, you put in the time, you get to a payout, and then they deny you because, oh, we noticed you DCA'd here, or, oh man, we noticed you got in and out of a trade in 5 seconds. That's a rule violation, right? And think about why those rule violations are violations. Are they CME violations? Absolutely not. They're violations of the rules for those firms because that is cutting into their bottom line. And because they're so misaligned with the trader, that's where you get the disconnect. That's why you get all the jacked up rules. That's why you get failures of firms, because when you get a bunch of people signing in and signing up and losing money, that pays the Pauls. But when those Peters dry up and everybody's learning like, oh yeah, this, they're not paying out, then guess what? All the money coming in dries up and they no longer have a sustainable model. With us, our risk is capped. With other firms, there is no capped risk. So that's kind of speaking on other things. Yeah, so non-individuals or companies from other countries to register. You're talking about trading as like an LLC. So we can pay you out as an LLC, but the actual trader needs to be registered because we do KYC and background on those people. So TFD, when will it be open to the public? Let me talk a little bit behind why we're launching as an invite, and I'm sure everybody's probably heard this a bunch, but we're doing invite only because one, we saw what happened in the space. We understand that our customers, traders overall, don't get treated very fairly. The customer service is generally pretty poor. They don't get treated well. They pay a lot of money and they really don't get anything in return other than a path to funding potentially, right? If they don't break any rules. Additionally, they would come out, they don't even have their help guides set up. They don't have any support. They don't even have a way for you to pay. Like you have to pay using a wire transfer. And then if you do get to the point where you can take payments, it's like, you got to fill out an Excel sheet. Like we saw this stuff going on. We're like, hey, we are not going to be that firm. We're going to make sure that one, if a customer comes into our ecosystem, our customer support response time is quick, a couple minutes most. We're all sitting there waiting for people to come in and ask us questions. We encourage people to ask us questions, and it's built right into our platform. So with all of that, with all these things, we're trying to make sure the platform, the auto journaling, there's some behind the scenes type of tech that's going on, as well as, we have a support staff, and we're trying to gauge how many people we can let into the ecosystem without like really deteriorating all those things like customer service. Like if we let a bunch of people in or let everybody in at one time, what if customer service started having an issue where it was like a 10-minute 15-hour response time? Like that's not fair to the people, right? The traders, if they need something or they're having an issue, we need to be able to address it pretty quickly. Like we don't want you to have to send an email and 3 days later respond to you. That's just not acceptable. So we probably won't ever be the biggest firm. We're going to be more of a boutique firm. But if you sign up with us, that's part of why you sign up with us. It's the customer support, it's the treatment, it's this feeling, and hopefully not just by me saying it, but you can see our actions. It's this feeling like, hey, these guys actually want me to be successful. I don't think I'm ever gonna like have a denied payment for rules because I'm in a live brokerage. Like it's all those things we really put a lot of time and effort into, and it's one of the actions with the invite system was the same type of thought process. Is look, we want everybody that gets in to feel like they're a VIP, right? We want everybody to feel like if they reach out and have a question, we're there for them. If they need some help with something, we're there, right? We don't want slowdowns on the journaling platform. We don't want we want everything to be very polished. And by having invites and having a cadence, it lets us ensure all that stuff is held to a higher standard. Now, most firms, when they launch, it's a money grab. They come in, they get a bunch of influencers and they get everybody all excited. And then what do? They get everybody in, and then everybody that signed up pays the consequences because they try to get, some help, and something's not working or something's broken. And good luck getting hold of everybody, right? Anybody at all. And that's something we want to avoid. And I think by doing the invite system, yes, I know it sucks to wait, but it also ensures that everybody feels like they're getting something for the money, because everybody works really hard for their money. And this money that they're spending on assessments is money that could be spent elsewhere, right? And if you're gonna come to us and you're gonna spend money and be our customer and be our partner in the future, we want you to feel like you're a partner. We want you to feel like you're part of our ecosystem. We want you to feel more than like a number, and that's really important to us. So again, that's why we're doing the invite stuff. I know long-winded, but I'm very passionate about all this stuff. So hopefully you guys feel my passion through what I'm saying. Yeah, so restrictions on number of accounts per household. So keep in mind, if you have a husband and a wife that are trading together in the same household, as long as both of them are trading from one household, we can KYC them, then technically they could both have 2 accounts. Now, people in the past, we came from another firm, they will abuse this stuff. And ultimately, as long as people aren't abusing it, it's okay, but it's a case by case, right? If we find something where 2 people are in one household and it seems a little iffy or wacky, we probably aren't going to allow it. So please don't abuse it. But yes, 2 people in the same household can trade per CME rules, regulations. And as long as we get to that KYC process and both people are able to be vetted, then yes, you can both have 2 accounts. But please don't abuse it. Futures options, not something we've really talked about much. Josh is jumping in a little bit. So I think that's the majority of the question. I'm sorry I got so long-winded on some of it. If I miss any questions, I'll give you guys a few minutes to ask some more questions. I don't want to take too much more of your guys' time. We're already about, a little bit over an hour and a half almost. Yeah, so Josh made a comment. This is not TFD, Josh, by the way. He's saying an old model of pay for sim is dead. I wouldn't say it's dead yet. There is, CME, CFTC has been talking about limiting these firms for quite a while. We'll see if it comes to light, but we're really trying to position ourselves as a traditional prop firm so we don't have to worry about those type of issues, right? We want to be in compliance. We follow the rules. We're really up to date on those regulations. We want to comply with everything. Hopefully you can see by the way we're launching everything, we're really considering, all avenues. We're not just fly by the night, type of firm. So we're really trying to adhere to everything. So our head quant is, he's the guy that basically deep dives into strategies and does all the back testing and finds new strategies, finds nuances in the market. He's, that's just a fancy way of calling somebody. He's like the guru of back testing basically, and he finds the statistics and the data. And that's our guy that worked at an actual traditional prop firm. He's very knowledgeable. He's probably the most knowledgeable trader I know personally. That's all he does is trade. That's how he makes his money. And I can tell you he's very, very, very good at back testing and fine statistics, and not just like win percents, but like deviations and the MFE and MAE and like everything you can think about. He's very, very, very knowledgeable in all that stuff, and he can tell you pretty quickly, if things are going to work or not work, and if they do work, what type of trader is going to be able to trade that strategy. Because strategies themselves, I could give you my working strategy right now, and it's not something that everybody will be able to trade because of how often it happens, the drawdown that you have to sometimes deal with, and things like that. Like strategies are very personal in that sense. Yeah, so head quant thing I answered. I don't think there's any other questions, so probably give it another minute and then we'll wrap it up. And if Raj wants to jump in and say anything, but I think that's pretty much it. Really appreciate everybody's time. If there's anything you guys want to see as far as like demos of certain things, like I know we talked about the risk stuff. I think that would be a really cool demo we can make. I think there is some stuff in our FAQ. Unfortunately, that's only available to the members that are inside of our ecosystem that kind of go over some of those risk controls, but maybe we could do a public facing video that everybody could look at and see. I really highly recommend everybody uses risk controls, especially ones that don't allow you to change them and they lock you out for the day. It's huge.
Isad could not connect today, but he will be on tomorrow or in the future, guys.
Okay. I think we're all done. No more questions. Feel free to message me on Discord or any of us. We're always here to answer questions. We're trying to be as transparent as possible. And I know that's hard in the space right now because the trust has really been deteriorated by some of these other companies. But just judge us on our actions. We're always going to do what's best for the trader within the best of our ability, right? We are a business. We are in business to make money. So, I mean, that's just a fact. But we're trying to balance that and ensure that we're always on the side of the trader, right? Our rules, our policies, the procedures, all that stuff are really well thought out and always geared towards how do we best help the trader and how do we best protect the trader, sometimes from themselves. So if you guys have questions about anything, please reach out to us. We really want to make it inviting, and we want people to feel like they're part of a team when they're trading with us, and that's our main goal. So please message us if you have any questions, concerns, or feedback.